get started for the Pulver report. Let's jump into the risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the risks. If you're following me on social media, make sure it's the real me. Give me 1 second here. Okay. Just had to switch up the microphone. So verified account on Twitter at real Chris Pulver, youtube.com/Chris Pulver Mondays and Fridays, and sometimes sprinkling some videos. If you click on the subscription button, the thumbs up, get the notifications, you'll see those videos pop up on your phone or whatever device you subscribe to. So that's it. And the other platforms too, Instagram at real Chris Pulver. Try to keep it consistent and just make sure it's the real me. All right. You want to message me, I'll reply back, but I'm never reaching out and spamming, soliciting, stuff like that. That's all very scammy. So get those people blocked and kicked off social media. All right, let's dive into the charts. Couple alerts just hit as opening bell is underway. Pfizer crossing some post earnings lows. Tesla's at 200 from highs at 215. Euro Aussie at recent highs at 5,600. The currency strength chart, just taking a glance at it from overnight. We have some dollar strength that took us into the morning, and the dollar's been fading back. The pound's creeping up with some strength as well. Everything else is pretty contained on the weakness side. The good thing is the euro's above the Swiss. The dollar having some strength that should have put me in some good positions on our currencies. So we'll take a look at everything this morning. SPY gapped lower. This is going to be a really interesting day to close up the week. So we're still here and here. Indecision basically all of February. I'm going to look at this Q trade. We're at 301.61. I have a, let me log into Interactive Brokers right now. I have a 302. I think it's a 301 by 302 bear call spread. I'm going to see where this goes for today. It potentially is a max loss of like 70 cents on the trade, possibly. But if we can push down below, 301 or 302 today, it's going to be interesting to see what the bears do. The market really just kind of took a really a crap yesterday afternoon. I mean, the markets finished on a terrible note yesterday. So, is there pressure to the downside? We have a couple things that the market has digested between the Fed raising rates and likely going to raise rates again in March and in May, and then the CPI data, which was, coming down by 1/10 of 1%. I think the market expected more. The forecast this week was, didn't type that in right. The forecast was 6.4% year over year, and it came in, or I'm sorry, the forecast was 6.2%, and it came in 6.4%. So it wasn't a miss necessarily for year over year. It's a slight improvement by 1/10 of 1%, but it did miss forecast by a little bit. So I think it just shows that inflation will be stubborn. The Fed's going to have to be hawkish on their narrative, and that is going to be frustrating for the markets. It's going to create some more indecision as we move forward. Oh my gosh. All right, hang on 1 second. I guess it'd help if I type in the right password, right? All right, so while I'm loading up the broker platform here, let me get into YouTube and say hi to everybody. All right, logging in there. We're live. And off we go. All right. So William, first one in the room. Nice to see you. Catherine is here. Chris is here. Gary's here. And good morning. Herbert, good morning. Thanks. Yeah, it's been a couple weeks. I still sound not the same, but I feel a lot better. I played basketball this morning, so all is well. I'll probably hit the gym up, get some skiing in this weekend, so I think I'm back to myself. Morning, Lawrence. How are you? Dr. Jacobs. Herbert, good morning. Andrew, good morning. Jan, good morning. David, Don, Denise, good morning. What's happening? Willard, good morning. Matt, good morning. Jason, what's happening? Jason, are you my giddy up guy? Somebody in the chat this week is like, giddy up? Greg, good morning. FK, good morning. Everett, good morning. Nice to see everybody. All right, just going to type in the chat. Happy Friday, everybody.
Bulletin received.
Happy Friday, traders. There we go. What's up, Scott? How are you? Okay, so I've got all these menus popping up for Interactive Brokers. Just give me a moment here to sort through it and bring up my broker platform there. Okay, now I can get back to the charts. So the Q's at 300.84, and I'm looking at a bear call spread and I think it's just on the Qs this morning. So, yep, I have a 301 by 302 and then my 310 by 309. So, the hard part is, it's today's expiration. My 301 by 302 is just now getting back into profit. If we close below 301 today, then I get full profit. I think it's 70 cents on that bear call spread. Let's see here. Bear call spread was 60 cents and bull put spread was 60 cents. So if I lose on the bull put side, that's 40 cents for the loss, but 60 cents on the upside on the bear call, which could be a net 20 cents for the week. So it's still, making a few bucks, but I'm going to see how the day finishes. We've been talking about this all week, and chart alarms are set here. This particular trade in equities on demand in the trading room, we rolled this out. I think we rolled this successfully to a 310 expiration, and then we placed new trades on a 331 expiration. So I like kind of these, directionally neutral Q and SPY trades because eventually something's going to have to break, right? I mean, whether it's bullish or bearish, I don't care. But I'm just trying to figure out whether the market is going here for more melt up and more bullishness, or here for the reality. That we did see. There's an let's see if I can. Let me send this email. I'll just read it actually. I took a screenshot of this. I thought this was really interesting. 84% of companies reported in the S&P, and the Q4 earnings are down 29% year over year. So this is the third straight quarter of negative year-over-year growth and the largest decline since Q2 of 2020. So if I send this screenshot, let me see here. I'll email this to myself and I'll bring it up. There we go. SPY earnings. Send. Okay. So that email should pop here in just a moment. I just want to share that. I think that's important to show that, there's kind of a lot of realities that the market could be dealing with. We have a hawkish Fed. We still have a hawkish Fed. There's more tightening being priced in by possibly another 25, maybe 50 basis points. Likely the market's not going to see rate cuts this year. And you have to remember, the market is always kind of a forward-thinking mechanism. So a lot of this melt up is part recovery, part that a lot of the narrative from last year was digested, and then this area is the decision point. If the market's kind of back to reality, like maybe the Fed is not going to be super accommodative, just like they weren't accommodative in 2022. So that could mean more contraction to the downside. Or if the market just continues to run higher, so be it. We have pretty much record-breaking put levels out there, so there's a lot of bearishness. The average fund, I mean, I track the Barclay Hedge Fund Index. That's something we compare ourselves to out here with our fund at Union Capital. And the average fund for the month, 3.6 in January, and we're happy to say we're at 6.5%. So most of funds and most directions, most macro outlooks are bearish going into 2023. So it's just going to be an interesting time because I feel like a lot of this may be similar to, let me see if I can get some, oh, I have to download the spreadsheet. If you go back to like 2017, every single month in the S&P, and I think almost every month for the Barclay Hedge Fund Index was showing gains, which has never happened in the history of the stock market. So again, that's a weird environment because it's just kind of, drift from a breakout of 2015, 2016 indecision. But we had pretty much a 23-month runway where all of 2017 and pretty much all of 2018 was just drifting higher. Then late 2018, we gave back 20% in like a month. 2019 was a recovery, 2020 was COVID, 2020 to 2021 was recovery and drifting crazy amounts of money supply in the system. 2022 was the Great Reset. I don't know if it's been called that, but that's what I'm calling it because that's what it felt like. That's what it traded like. And that certainly seemed to be the case for tech, was just the reset. I mean, tech got unfairly punished. Now, granted, tech was overvalued and the high PE ratios and whatnot, and unicorn valuations and money just getting thrown in like tech is the greatest thing ever. But it was a house of cards. And so, all of your rebalancing in tech was what also brought the indices down. So anyway, long story short, I mean, the market's got a lot to digest. I get it. And this month in February, it's been doing it. It's been digesting it. It's been totally indecisive in February. Okay. So, Anthony, yeah, this is live. We're live, dude. I mean, come on, man. We're always live. Monday and Friday, Pulver Report, we're live. You know the deal. All right. Okay, good. So indecision on the Qs. Chart alarms are set. This low is 297.29. The high is 313. I'm just going to get in here to the smaller time frames. We did gap lower, right? We're sitting at 300.57. Like I said for today, if the Qs close below 301, then I'll walk away with 20 cents net on this trade. I still have this trade rolled out for a couple other accounts into 310 expirations and 331 expirations. The rate decision for the Fed is going to be March 22nd. So the CME Watch tool, March 22nd is a 25 basis points increase. That's the expectation with a high probability. There's a 79% chance we're going to see that. That's March 22nd. May 3rd, another 25% with a very high probability. And then I just go all the way off to December because essentially that looks like to be our pause. If I go to June, aha, huzzah. Check this out. This changed this week. June right now is another 25 basis points. What the heck? So potentially raise by 25 basis points and pausing through the end of the year. Let's see what December shows. Does December show 5.25 is the highest probability now? It does not. It shows that there's maybe that's so weird. Like, why would the Fed raise, and then cut by December? So that's really interesting. So June, we're going to keep an eye on. We could see this get like this 5% to 5.25 could also get back into 50-50 where the market's not quite sure, but pretty probability wise we're pretty certain here that March and May are going to be 2 rate hikes, and that would put the Fed up around 5.25. We get the June rate hike. Now we're talking 5.25, 5.5. And again, this is what happened all in 2022. The Fed kept moving the target to the upside. Let's take a look at some of these yields. If you look at the 3-month yield, so US 03M, that should be, I don't want bonds, I want the yield. So US 03Y, US 03Y, there we go. So we're sitting at 4.38% roughly on the 3-month. Write that down. I'm just going to type this in. So we have a 3-month, 3-month at 4.38%. We have the 10-year at 3.88%. At 3.88%. So there's your 3-month 10-year inverted yield curve. And then you have your US 02, your 2 and 10-year, right? 4.67. The 2-year at 4.67. So the reason I bring those up, these combinations are what lead and have led to, successful predictions of recessions. So the 3-month 10-year has predicted 8 of 8 recessions. The 2 and 10-year has predicted, I think, 11 out of 15 recessions. And another one that I thought was interesting is it was like a 6-month US 06Y. Do we have that? 06. 6-month government bond yields was up above 5% yesterday for a split second, or this week rather. So we spiked up here. That high was 4.89. We had a recent high above 4.95. So 6-month bonds, locking in 4.8%, 5%. Clearly, there's short-term yield right now. And that inverted yield curve is one of the deepest that we've ever seen. Here's a good way to show it. The 2 and 10-year Treasury yield spread. Again, this might be very boring for some of you, but if you go back, look at this chart. 5-year, 10-year, look at this. Right? Look at the 5-year, look at the max if I can load it. This to me is crazy, right? You go back to this. If I was a subscriber to Y Charts, let's go back way further. But 2018, we had a dip right there. This technically is where we see like, oh, there's a recession right after that yield inverted. There's a recession right after the yield inverted. Look at us now. Like, what do you call this? That is like the deepest territory. We have like a 0.8% inverted yield curve, and yet we have basically recession deniers out there like, well, the labor market's too tight. It's not a recession. We're not losing jobs yet. Okay, well, are we going to lose jobs? We're seeing that with most of the earnings reported, and it's a 30% year-over-year decline. There's an earnings compression. Most of the S&P, right? Most of the valuations in the S&P is priced because of earnings and because of interest rates. And we have a tighter interest rate policy, and we have earnings that are not as good. I don't know. And again, it could be the complete opposite of what the market should rationally do. But I don't know how the market can justify this with the reality that probably points more to the downside. So I am making sure that we have plays that protect us to the downside and we're not overcommitting to a ton of positions. Okay. Yep, I see that there, Denise. Yeah, expectations out 3 more 25 basis points hikes, and it looks like March, May, June. Just get it out there, and we're going to see what the market wants to do with that. So the SPY sitting at 405, the Q's sitting at 299. So again, I mean, this could work out really, really well for this week. This could be an easy little trade where this is what I put on Monday of this week. And I was like, well, if we get a breakout here and there, because I thought CPI data would be enough of a catalyst to drive the Q somewhere, and tech is a little bit more sensitive to the S&P, And right now, I look at something like Tesla trading at 199. I have a $200 cover call today. If it stays below $200, then I'm going to jump in and throw another, kind of near or at the money covered call and hopefully grab another $4, $5, $6 off of my cost basis. And then I have a 192.50 out to next week. Uber is trading at 35.76. I was able to roll my call up and out. Oh, fudge. I didn't even save my screenshot from yesterday. I did a lot of work on my charts and accounts. I didn't save that update. Actually, I did. I do have it. I sometimes surprise myself. Did I put in the expirations? 217 expirations. I sure did. Okay. So I was working off of this page here. Where's it at? This guy. Working off of this page here. So these are all the expirations that I was looking to work with. Amazon at 99. I rolled that up to I think 100 or 101. Couple of these are credit spreads are getting full profit. SLB's full profit. I got rid of Pfizer. I took some assignment on Pfizer. I also took some assignment this week on Under Armour. So a couple stocks I like, but I'm just preparing for a little bit more of a directional move. Right now, one thing to note, and we'll get into currency here in just a minute, as I have just a few more minutes before I start class at 10 o'clock. We gapped lower today. Okay, so here's what I'm going to say. Amateurs open, pros close, right? So if we gap lower, this is going to be a really important watch for the day. The close of today's market, if we close beyond this low right here, I think the bears are showing their teeth and they're going to start clawing back and showing some strength. Bears closing below 404 on the SPY probably brings us back into 400. And I said the last couple of weeks, if we break below 400, I think the bears are back in control. Now, we might have this as a potential support level, maybe, 390 to 388. But at the same time, this could also be one of these patterns. Inside of the structure, we might be looking at something like this. Maybe this structure here, right? So does everybody see me drawing that? I know I have a bunch of lines on my charts, but something like this, that's a broadening pattern, okay? And so it gets really messy in this midpoint, and that's where the market is struggling. So we can still have some clearance to the upside, but I also think that if we break back below that midpoint, it opens up this downside where this becomes the target, right? So we have bullish and bearish targets, way beyond, way below, but the market's going to have to be willing to go somewhere. And as of right now, for most of February, we have not seen that. And so, as I said, amateurs open, pros close. One thing that's going to be important to watch for today is we did gap lower for the morning. So we started lower, we're pushing lower. The gap is right here. If the bulls can close us back up inside this indecision point and just be a fake out today, I still think it's contained. Okay? And that would be a bit of a sigh of relief. But if we gap lower, close lower with a nice convincing daily candle body below this, then I think next week's going to be a pretty rough week to finish out the month. All right. So I'll be watching the Qs today very closely till closing bell at 299. I've got a 301 by 302. Hopefully that will continue to decay quickly and rapidly. And right now I'm showing that I'm up about $600 in that trade, and I need to make sure that let me see here. I could close. Let me see what they're going to make. Are they making me close this down? If I close down the bull put spread, I close it for 90 cents. If I can save, well, I got 60 cents. I'm going to lose 40 cents in that trade. Okay, if I could save maybe 5 cents on that trade, well, the problem is I can't close out the bear call spread for profit. It's going to have to stay below. So that's going to be one I take towards closing bell. But we could be in good shape. It closes below 301. It's fine. I'll make it at 21 cents, and that's $400 on that trade. All right. Let's do a little rapid session for some currencies. So far, it's been a pretty good week. So we're short on Aussie CAD. That's working out well. We've been short on Aussie dollar. That's working out well. Some fresh lows. I love that. Euro dollar, we've been short as well. Targeting this yearly pivot in the lows around 106 and 105. So those three trades have all been pretty profitable. Let me take a look at my broker platform. Just going to check on my phone. And we are sitting at, position wise, 107 pips in profit on the Aussie CAD, 142 pips profit on the Aussie dollar, still up a net 150 pips on the Euro Swiss, and from 108 to 106, we're about 170 pips up on the Euro dollar. So far, so good on that. Some robot trading this week. My Pockets Pattern Pro robot's up 321 pips. For this week, it closed out another nice win. That drawdown is sitting at 1.66%. So I'll bring these up in a second. So that's Pockets Pattern Pro, Perfect Storm, the original Perfect Storm Pro. Okay. So I'll just bring this up for a moment. There we go. So my Perfect Storm, this is Perfect Storm Pro. Oh yeah, so the adjustment didn't change. I talked about this yesterday. So this particular robot had a couple of scale-in trades. I think it was Aussie New Zealand. It lost pips this week, but I made money. So it was down 427 pips on closing out a group trade, but because they were different trade sizes and the trade size got slightly bigger, it closed me out with profit this week. So I still made $228 on my Perfect Storm Pro. My original Perfect Storm is right here. It cleared out 362 pips of profit. That drawdown has tightened up a little bit, which I'm pretty happy with. We're sitting around 7.66% with 362 pips of profit. And then my Pockets Pattern Pro, I love this robot. This is a super tight drawdown around 1.7%, close out for 321 pips this week. So some good automated trading, some good runs in Aussie dollar, Aussie CAD, and Euro dollar. And we're going to look for some trades also on Euro Aussie. We hit 5,600 this morning. Did anybody look at a rejection trade? So we were talking again. It wasn't 56 that we were looking to sell, but it was 5650 to 5700. These were the levels that I was looking at major resistance and see if we can hit some highs, turn short term on Masterflex on the smaller time frame, and have a nice little sell trade. Euro New Zealand was another one. We were looking for some range opportunities, trading at 71.28. Okay, all right. Euro New Zealand, you might finally be showing your teeth. Maybe we have a breakout. So coming into next week's trading, flex traders might be looking for this little breakout to the upside on Euro New Zealand, right? So we had some indecision. I was willing to go either direction. This might be the open space that we get to trade next week. So I want to make sure we close above there first, but I'm going to keep an eye on that one. Okay. Is it just where? I mean, hopefully it's not lagging too much, but actually, let me get caught up here. Yeah, I'm way behind. We're good. We're good. Okay. Catherine says latest PPI. There's discussion of a 0.5% Fed. Uh, yeah. Well, Catherine, that would be reflected here if for what you're talking about. I get it, but it'd be reflected right here. This is like one of the most accurate tools that we have for what the Fed is likely going to do. So right now, March's rate hike is probably going to stay at 0.25%. And then May's rate hike is another 0.25. And what I noticed changed is we're getting another rate hike potential for June. So 25, 25, 25. And again, think about this from ending last year and coming into this year, the market was essentially saying, okay, the Fed's going to raise rates in March and then pause the rest of the year. Now we're looking at the Fed raising rates in March, raising rates in May, raising rates in June. Now, they are notorious for talking and hinting and not necessarily having to do it. So if they can get some free mileage and they can compress, assets essentially, compress the markets a little bit more, scare the pants off of the speculation, then maybe it kind of brings things back down and we can stop seeing that sticky inflation. And maybe they don't have to raise rates in May and June. But that's also the market. Like we knew it, we knew they wouldn't do it. So I just think the market it's gonna be this weird game of chicken. Like the Fed is gonna be constantly on the cusp of can they actually truly talk the market down to where they want it to be. Um, so we're just on the verge. That's all. So anyway, let's flip through some currencies and we'll wrap up. I got equities on demand in 2 minutes. Masterflex a little bit after that this afternoon. We're trading at 1.10 indecision there. Aussie CAD, I like bullish, or I'm sorry, I like bearish right now and staying with it. Aussie Swiss, we're going to see if we can hold some support at 63. Yen crosses, there's some decent volatility in the short term, but you got to stay short term on yen crosses. Aussie dollar, like bearish. CAD Swiss, a lot of indecision, but I still like bullish longer term. CAD yen, no trade. Swiss yen, no trade. Euro Aussie, we're going to look to see if we have some resistance here at 57. EuroCAD, getting a pullback on EuroCAD. If we can come back to 46, I'm going to sell this again. But I'm also noticing that this level are equal. This could be setting up a head and shoulders. So we may be looking in this zone for a right shoulder, get a head start, take this back down to the yearly pivot. Also this 200 EMA. So we might be looking maybe at a bit of a position here around like 144. That's 1.44 to 1.46, and see if we can kind of catch a bit of a right shoulder. Otherwise, let's look for an equal high and some range trading to sell it high. Okay, that's Euro CAD. Euro Swiss, we're trading at 99. Some decent bullishness. We need to see this thing break back above 1.01, and then I think there's room to 103.50 and 105. Euro pound turning back down. Euro yen no trade. Euro New Zealand, we might have a nice breakout to the upside. We'll talk about next week. Euro dollar continues lower. I'm targeting this 105.30 area, this previous low. Pound Aussie pushing higher. I want to try to get a buy trade on Euro pound around 7,200. Pound CAD, I'm looking to buy this thing potentially off the 1.6 handle, this 1.59 yearly pivot. Pound Swiss turning up off of 111. Pound yen short term. Pound New Zealand still choppy inside this range, but we're looking for a sell trade maybe next week. Pound dollar, take your profit if you're at 1.20 or lower. New Zealand CAD has been sliding down towards this yearly pivot. This could be a good buy zone. Right in here, there's some fib levels. Just take a fib from low to high. Look at roughly a 50% zone, but I'm looking for some bullishness in this area to take the New Zealand CAD back up. So we also should have a rate decision coming. I think in March. I think the RBNZ is looking to raise rates again. Maybe it's another 25 to 50 basis points. New Zealand Swiss, we're pulling back. This is either a head and shoulders. We talked about this week in Flex. If somehow this thing comes back down, this could be a really good double bottom. To take it back up to this level, if we break these highs, we're talking a big move to the upside on New Zealand Swiss, or just a massive range. New Zealand yen short term. New Zealand dollar's been pulling back quite a bit, back to equal lows. Let me move this over here. Something like that on the New Zealand dollar, just sideways, but we'll keep an eye on that one. Dollar CAD, we've had 1, 2, 3, 4 bullish days in a row. It just didn't come low enough. I want to buy this thing around 31 or 1.30. Didn't come low enough. We're going to have to watch it. This one might start heading up. Dollar strength, oil weakness, maybe a little bit more pressure on oil towards the 60s. And dollar CAD pops up. Dollar Swiss 92.98. Had a nice spike today up towards 93.20. Looking good. Dollar yen continues to push higher on the right side of the trend line. The peso. This got on our radar yesterday in the flex room. Peso's looking pretty interesting for a potential buy trade if we have some bullishness. If there's a nice yearly pivot. The problem right now is, the Fed's raising rates, that's great, but if it's risk off, here's what happens. If we have risk off trading, sure, then maybe the dollar turns up. If we have risk on trading, the peso's interest rate is, I think it's 7.5% or it's 11%. It's way up there. Let me see here. CBRates.com. Mexico is at 11%. So it would be a positive swap if you are short. It'd be a negative swap if you're long. So I'm a little reluctant to start incorporating negative swap or negative rollover in my account because I've been enjoying for the last month and a half getting paid to hold some of my positions. Dollar Sing is another one that we're in. We're at 33.81. That puts us up 80 pips on our first entry and about 230 pips on our other entry. So we bought this at 1.3300. We bought this at 31.50. I just missed my entry at 3,000. That'd be a huge trade. And so I'm looking for pullbacks to add. So any pullbacks on the dollar Singapore, any pullbacks here, I'm looking to buy more. and I'm taking this back up to this midpoint. So dollar thing's looking pretty good. I'm happy that we took that trade. Okay, all right, it's 10:02. I got to go. We have class. I got to jump in equities on demand trading room. Any questions? Yeah, Masterflex this afternoon, Greg. It will be at 1 p.m. Thanks, Gary. All good. All right, everybody. And really quickly, if you would, we had about 70 to 80 people watching this morning. Would you kindly hit the thumbs up button for me before you go? We got 80 people. Let's get 80 thumbs up. Like it, saturate it, make the algorithm happy. Give it a smiley face, and that way, notification bells around the globe can start to seeing some Pulver report sprinkling. Good, good. Okay, thanks, Ann. Thanks, Gary. Thanks, Greg. Equities on demand traders, I will see you in the trading room here in just a few minutes. And thanks for being with me today, everybody. Happy Friday. Have a great weekend. I'll be back on Monday for the Pulver report, 9:30 a.m. Eastern time. And take care. Talk to you soon. Bye.